Is Canada's housing market about to crash? I'm going to get into what I really think about this subject, and let's call this your 2026 action plan right after this.
Hey, my name's Ken Dunn, and I'm a real estate investor. I want to welcome you to the No Money Real Estate Podcast. On this show, I'm going to interview elite level real estate investors from all over North America, and I'm going to help you to see one thing that all successful real estate investors have in common. They build their portfolios without using a dime of their own money. I've got a portfolio of $300 million in real estate. That includes resorts, apartment buildings, commercial buildings, and I built the entire portfolio without using a dime of my own money. Real estate is a business that anybody can get into, but the strategies that those tight real estate investors use to build massive portfolios have been kept secret for decades. Now, because of this show, I'm going to reveal them to you. So let's get started.
So the reason I'm doing a video on this subject is I saw that headline in a local newspaper today, and I couldn't believe how timely it was, because I've been doing a lot of talking about what's coming in the new year in 2026 recently. And what really caught me about this one article is this article purported that we're just at the beginning and that the housing market is going to fall through the floor. And I have to tell you, I strongly, adamantly disagree with that statement. And I'm going to tell you a little bit why I think that it's not about to crash, that the crash is already happening and we're going to get through it in 2026. And what you can actually take advantage of if you want to get into real estate investing, or if you are a real estate investor, here's some of the things you should keep in account. So if we're going to take a look at why the housing market is struggling right now, what it's actually going into, we need to actually go back in time. We need to take a look at the period that started in 2019 to today. You want to know why we're having trouble in the housing market today? You have to look at the pandemic. That's really what it comes down to. So if we take a look back in 2019, what was happening in the housing market, we saw historic drops in interest rates. Now, there's a lot of people you can blame for this if you want to blame people for it, but if you want to look at all of the foreclosures that have happened in 2026 or 2025, especially in the condo market, you kind of have to look at the presiding government at the time and the Bank of Canada, what they were doing at the time. Because of all the unique situations that occurred in and around the pandemic, the Bank of Canada dropped the interest rate massively. And because the Bank of Canada dropped the interest rate so much, it spurred a buying frenzy, if you will. I remember back at the beginning of the pandemic, or just before the beginning of the pandemic, I was building my cottage portfolio, our short-term rental business, which is doing amazingly well right now. I'll talk to you about that in a couple minutes. But when I started buying cottages and decided I was going to build a portfolio of 100 short-term rental properties across Canada in the next 10 years, we went out and really started going crazy buying cottages. Why? Because we could get amazing deals at them. We would specifically look for cottages that were 3-season cottages, so they weren't winterized, and they were dilapidated. Because what we found was if we could buy properties, we could normally get them, I want to say 30 cents on the dollar. We could get 1,000 square foot cottage with 3 bedrooms and a bathroom that had a lot of work that needed to be done and wasn't winterized, but we could get it for $250,000 to $300,000. And we bought a dozen of them in 2 years. We renovated them and we started renting them. Then the pandemic happened. And literally within months of the pandemic being declared for what it is, governments started shutting down around the world, and they put flight and travel restrictions in place. You guys remember this. But guess what happened when those flight and travel restrictions were implemented? People couldn't leave Canada for their winter vacations, so what did they do? They bought cottages. It was unbelievable what I saw. Within months of that pandemic being declared, I couldn't buy a cottage anywhere near what I was used to paying for it. And every time we would put an offer in on a cottage, we were met with several offers. There was housing war going on. It was absolutely crazy. It got so bad that I switched completely. What I mean by that, one of my very first mentors in real estate, he said, Ken, I want you to remember that everything is for sale all the time. If the prices are right, be ready to sell your whole portfolio if the market dictates it's a selling season. So when that happened in the housing crisis, we did that. We literally sold 7 of our properties, and it literally went nuts. Cottages that I was buying for $300,000 that were 3-season completely dilapidated cottages were selling for $1 million. So even after we'd buy them, renovate them, and double the value, we made significant money when we sold those cottages. But It wasn't just cottages. Because of those interest rate drops, other things happened too. In the general housing market, people were buying houses way over asking, way over what comparables were at the time. And it was insane, really, what happened to people. So that was in the general housing market. And then in the condo subspace, same thing happened. In 2020 and 2021, massive new projects were started. And those projects starting were all spurred by those low interest rates, because what developers could borrow money back at that time gave them the opportunity to start all of these amazing new condos. They're estimating that between 2019 and 2021, that over 50,000 new condos inside of their projects were started just in the GTA. And all of those places were snapped up at crazy valuations by speculators. People that were buying pre-built condos. And in that spec market, it's all going to work out okay as long as those prices keep their values. But what happened? As we got through the pandemic and the pandemic ended, the Bank of Canada started raising interest rates again. They were worried about the economy moving too fast. Too much spending going on, valuations getting out of control. And when you see those economic indicators, the bank raises the interest rates. But when that happened, it killed everything else that was going on. When rates go up, price values go down. The market slows down. So those condominiums that 50,000 people bought on spec, meaning they bought them before they were finished, when those were finished in 2023 and 2024, the value of those condos were down in the GTA by more than 40%. You know what that meant? Record numbers of foreclosure. Because somebody who bought a condo as a spec in 2021 and paid $1 million for it, they were expecting to get bank mortgages on that at $1 million value. You come back 3 years later in 2023 when it was finished, the developer still wants them to buy it for $1 million, but when they get their appraisal done for their bank, that place that was worth $1 million is now worth $700,000. And the developer's not willing to budge on it. So what these people end up doing, tens of thousands of bank foreclosures, meaning the people had no way to finance these properties. The banks weren't giving mortgage for it. They didn't have more money to put into it. So they died. And there have literally been record numbers of foreclosures in the last 2 years in that space. Now, what's happening? In 2025, rates started to drop again. And the Bank of Canada literally took 1.5 points off the rate. So at the end of 2025, we're looking at a prime lending rate that's just over 2%. Now, when the pandemic happened and that rate dropped to historical levels, it was below 1%. So all these houses in this crazy purchasing, selling battle that was going on happened when it was a sub 1% interest rate. So you want to know how we're going to fix this? The Bank of Canada in 2026 will drop the rate again as much as another full basis point. Another 1% is going to come off of that rate, probably in the first 3 quarters of 2026. So what's that going to do? It's going to heat up the market. Prices are going to start to go up again, and people are going to start to buy again. Now, what does that mean for a real estate investor? What does that mean for this year coming? It means that in the first couple quarters of this year, in I'd say January through June, you're not going to see significant moves. You're going to see the Bank of Canada that's probably going to do a couple 25-point cuts. So 0.25 and 0.25. So 50 basis points, you're going to see that prime lending rate go down again. And once that does, things are going to start to heat up again. When things start to heat up again, people are going to start buying. Going into the last part of 2026, you'll see another rate cut, and you're going to see things get really active in the last half of 2026. So how can a real estate investor take advantage of this? And what should you do if you're a real estate investor going into 2026? Start buying. Prices for properties, historical lows, really great valuations right now. You're going to see a house, like a standard starter home, a 3 to 4 bedroom, 2 to 2.5 bathroom, 1,000 square foot home in the suburbs, right now is listed for $700,000 to $800,000. By the summer, that house is going to be selling for $900,000. Into the fall, it's going to be selling for $1 million again. So what you should be doing is looking to buy properties now. Values are at lows right now, and nobody knows for sure what's going to happen. I'm giving you a prediction right now, but you can be sure that if the rates go down lower, prices are going to start going back up again. And the Bank of Canada knows that. And that's what they're considering doing right now. When they didn't move the rate at the beginning of December, they weren't saying we don't need to lower the rate anymore. They were asking themselves, is this the right time to lower the rate? And they knew going into the Christmas season, think about this for a second. They're going to lower the interest rate to spawn spending, to get more people spending. But historically, they will never do massive rate cuts at the beginning of December. Why? Because there are certain times of the year where they're going to spend, even if it's hard to spend. And Christmas is one of those seasons. So there's no way if they drop the rate, if they could actually determine economically, did the spending increase because of the rate drop? So what they're going to do is they're going to look at their next rate drop. I think it's going to be in February. I'm not quite sure about that. And they'll be able to make a better determination on what happened in January for how much they're going to drop the rate. But they will drop the rate. It wasn't that they didn't want to drop the rate in December. They just knew with the Christmas spending season, it wasn't a good time to do it because there was going to be lots of spending anyway. So going into the first quarter, there'll be more spending. There'll be another rate drop and it will spur more spending. That's when we're going to see the turn start to actually happen. So if you're a real estate investor, you need to be looking at ways to make money with this dilapidated state we're in. Now, over the last year, house flipping has not been a really safe way to make money as a real estate investor. But going into 2026, pay very close attention to it. If you're going to do a house flip, you're going to take 6 or 7 months for that process to happen. You're going to go find the property and buy it, and then you're going to wait 3 months from when you buy it till you have it under contract, and then you're going to renovate it, which is going to take 3 months to sell it again. So when's the best time to get a house flip under contract? January. Because if you're waiting 3 months until you close on the property, January, the rates are going to be the lowest of the year. That means you're going to be closing February, March, April. You're going to be closing at the beginning of April. It's a great time of year to do your renovations because winter's gone. It's easier to do renovation work when there's no snow on the ground. So you'll have April, May, and June. And if you talk to any real estate agent, they're going to tell you the best time to sell a property is May and June. So if you do it right, a house flip, you're going to be selling in June. Rates are going to be higher, and it's the hottest selling season for that whole world. So house flipping, keep your eye on it. It might be a slam dunk right time to do it leading into 2026. My favorite type of real estate investing, short-term rentals. Short-term rentals, it's a good time to look at it. Why? Because of what's happening in the United States. Record numbers of Canadians are staying in Canada again, and short-term rental occupancy is up. Our portfolio of 11 properties is literally booked at 90% right now, going into December and January. That's because of what's happening with the Trump administration in the States and prices going down. Moving forward, that's not going to change. Trump is in office for another 3 years. There are record numbers of Canadians that are staying in Canada and they're taking their vacations in Canada. Sounds like a really great time for me to open up a couple of cottage resorts, and I'll talk to you about that in another video. So short-term rentals, really great time to do it. Why? As long as you're focusing on vacation rentals, because more people are staying in Canada right now, more people next summer in 2026, it's suspected to be a record year for Canadians vacationing in Canada. Here's the other thing we're seeing a significant uptick in is people that are from Europe are choosing Canada over America for their vacations next summer. So in the short-term rental game, it's a great time to get into it. You can buy properties at really cheap prices. You can ride the wave as values start to increase into the second quarter of 2026. And you're going to see record numbers of people looking to book cottages and vacation properties for their summer vacations, and they're going to go to Airbnb to do that. The last thing I'm going to talk about, with everything that's going on right now, you've heard me talk about this a lot over the last couple of videos that I did, multifamily real estate. Our push on the provincial government of Ontario is working. More and more changes are going to keep happening to the systems between tenants and landlords and put more of an even playing field in place, because the provincial government of Ontario is seeing what's happening in Alberta and it's causing them to rethink what they're doing. It's going to happen. Every indication from the federal government is they're going to keep the MLI Select program in place, and with that program in place, multifamily real estate couldn't be better. You can buy an old dilapidated apartment building inexpensively right now compared to what it's been over the last couple of years. Prices are down, and the federal government will give you 95% of the money, and If you jump into their program now, nothing's changed yet, they're going to give you a 50-year amortization, which will represent a significant income opportunity for people that hold apartment buildings in their portfolio. So what do I think about in 2026? For real estate investors, the market isn't going to crash much more than it already has. So anybody that's telling you the worst is yet to come, they really need to be questioned on how well they know the market. If you pay attention to what the federal government is doing and what the Bank of Canada is doing with their interest rate, you're going to see a significant reduction continuing over the next couple months, and it is a great time to buy properties. Hey, listen, if you want to make sure you get the best advice in 2026 and you get the right direction for your real estate investing business and for the growth of your portfolio, join us for the Succeed in Real Estate Investing in 2026 weekend online event. We're charging $2 to join us online, and we'll have all the answers for you. We're going to give you some great advice on where you should go in 2026, what's going to work the best with a team of seasoned real estate investors that are there to serve you. We'll see you at the event, and keep moving forward.